Well, welcome. It's 2024. It's the first week in the books already. And this week's show is a little different. We're going to talk about the end of December this week. Before I even start talking about 2024, we're going to just talk about December of last year and end of quarter as well. And we'll start the 2024 conversation next week with next week's show. So let's jump right in and kind of see where we're at. This is going to be a little longer show because we're going to talk a little bit more about kind of what's happened and maybe where I see things heading for the next year. So we'll start off here with the listing activity status, and this is going to be kind of our roadmap here. We're going to start off with new listings and kind of see where listings kind of came in and talk a little bit about what we saw so far in the last month of the year and the last quarter of the year, and kind of maybe show you also what we can maybe expect starting into 2024 here. So the breakdown at the end of December, we had the bulk of our listing inventory was in that $300,000 to $400,000 price point, which is pretty common for us anymore. $692 in the $200,000 to $300,000 price point. So it's nice to see those numbers a little higher than we maybe saw earlier in 2023. But I think we're going to see more inventory hit the streets here in 2024, but we're not seeing it quite yet. We had our typical slowdown the month of December there. So as you can tell, under $100,000 price point right here, that's really the market where we really need inventory. And if we get more inventory in that price point, that will help jumpstart the spring market here. So as far as months of inventory across the same price points there, you can see that really under that $200,000 price point is where we were still in that seller's market with less than 3 months of inventory. The bulk of our market is in a balanced or even market, which at the end of the year is described as between 3 to 5 months. And I said that wrong. Actually, we're in a buyer's market above 5 months. So the red markings there, all but 4 months or 4 price points are in that buyer's market at 5+ months of inventory. So really, this is probably a sign that it's a good time if you're looking in that above the $300,000 price point anyway, maybe to make some deals here before we get the year started off, because there's more inventory than there are buyers right now by the looks of it. So anyway, keep that in mind. Median list price at the end of the year, you can see that right across over here on the right-hand side, the purple, we just basically flattened out at right at that 300 and a little over 300, right at $350,000 median list price from about the second week of November on, and it hasn't budged. And so what we see typically at the first of the year, you can see 2022 and 2021, we tend to see a rise. And early in 2023, we saw a rise in that median list price as home buyers or home sellers started to wake up and enter the marketplace. So this is probably and typically the best time of year if you're a home buyer to find homes at the lowest prices before we get into that early spring market. And you can see where we spent much of the summertime in that $375,000 median list price last year. One of the quarterly reports shows you kind of here, this is the far end down here, quarter 1, 2, 3, and 4 shows you all 4 quarters of last year, 2023. And our inventory or our median list prices actually did kind of come down slightly throughout the year, which is fairly typical of what happened in 2022. It looks like back in 2018 we had that similar, 19 we saw that similar pace where we saw prices higher in the spring market, which is kind of a normal type of a market path here where we builds up in the spring and then kind of slows down on the end of the year. So that tells us that we're kind of hitting back to some sense of what we would consider normal. 2021 and 2022 or 2020 were not normal years by any means at all there. So if we look at just the fourth quarter and how it compared to the previous 5 or 6 years here, we did break over the 3,000 homes for sale mark, although it did drop below 3,000 right here at the end of 2023. So we ended the year at 2,957 homes on the market at the end of December last month there. And, really we are building inventory the last couple of years. And I would like to say that we would, hopefully 2024 is similar to 2018 or maybe even 2019, where we're hitting that 3,500 to, boy, if we hit 4,000 listings at one point during the year, that would be fantastic. So let's kind of hope that happens there. So as far as the pending sales side of things, again, here's that same breakdown by price point here. The bulk of our current homes that are under contract are in that $200,000 to $300,000 price point. Sale pendings are at the lowest at any point during this year right now, and that's pretty typical as well. You can see that there's only 232 homes waiting to close at the end of December in that $200,000 to $300,000 price point, and it's chased by the price points above and below that, and then you get down into under 100. In fact, you get under 50 really beyond that $400,000 to $500,000 price point. So if the market feels like it's a little bit slow, this is sure kind of confirming that. And then again, looking at that sale pending count at the end of the fourth quarter. First quarter builds up, second and third and fourth quarter drop down. We've seen that same kind of consistent path the last several years here. As far as closed sales go, we're going to look at some closed sale numbers here. This was the projection. This 13,220 was my projection at the end of the year based on the pace we were moving toward. And I don't know whether it was just because Christmas and New Year's were on a Monday and it kind of shortened the week and everybody was kind of off, but we did end the year a little below that, but we did break 13,000, and we talked about that last week. We're at 13,069 as of December 31st, and I can tell you I've looked at numbers here this week, and we are up about another 150 or so above that as well as of today. So I would think that we're going to be on track. Maybe within that first 30 days, 25, 30 days, it would be nice if we would hit our first 1,000 of closed sales because we did have kind of a buildup as we were moving into November and December when rates were falling pretty quickly. So even though there's not a lot of homes maybe under contract right now, I think a lot of those were put on the books in the month of November and December, which means we should have some January closings. And that would be a nice bump to the year if we can start out the year at hitting that first 1,000 milestone fairly quickly. So this gives you an idea of where we were December 31st, again with that 13,069 closed sales as of the end of the month. And again, that's just a snapshot. That puts us pretty close to 2015, maybe 2016 business, somewhere in between there, as far as closed sales. And I think that all indications are nationally and what we're hearing from the economists nationally and as well as maybe locally here, I think we're going to see increased sales in 2024 over last year's numbers. So hopefully this 13,069 is just a bump in the road this last year. And, that's going to be kind of our slowdown, and then we'll move forward moving into 2024 and beyond. Closed sales per quarter. Again, this is the quarterly look at that same data. Again, fourth quarter typically is our slower closing month, and that's very consistent with what we've seen the last 5 or 6 years there. Median sale price, even with the lower number of properties in sale pending status and our rise in inventory, we're still seeing, and of course with the rise of interest rates throughout the year until basically that last quarter, we are still seeing median sale prices higher than they were last year. They were trending downward just a little bit, as you can see this last 3 bars here on the far right, but that's kind of pretty typical. I would say that we're probably not going to see a major price correction, if that's what you want to call that. I don't think we're going to see prices come down tremendously. There might be a little bit of a dip, maybe if we come back to 2022, maybe 2021 pricing, but it would not be realistic for us to look at this and go, gee, now that things are recovering, that we're going to see prices come back down to this 2020 or 2019 range. That's just probably not going to happen. We're kind of now locked into this pricing home sellers are expecting their homes to sell for that price, and they're going to probably hold out. And our days on market might go a little bit longer, but we'll see if that's the case there. In fact, speaking of days on market here, we did end the end of the year right here at the far right with almost 25 days on the market there at one point. I think we're at 24. As typical as at the beginning of every year, we typically have a little bit of a buildup of days on market where the pace of sales is a little bit slower. Last year, 2023, the first 3 months were quite a bit higher, and I think it was just the uncertainty of what mortgage interest rates were going to do, which kind of stalled the January market activity. So, we'll see. Weather might be a factor this year. So far, we've had a mild winter so far. Granted, winter's only been in existence here the last 2 or 3 weeks, but the winter season has been fairly mild, and that could be a factor if interest rates continue to drop. Although they rose just 0.1% this past week. If rates continue to drop, I think that will spur on activity, and then days on market should pick right up fairly quickly there. So, all right. So we talked last week as well about price increases and price reductions. So we're just going to kind of skip that this week. We're going to talk directly right now about back on market. And of course, back on market is the bombs. These are the ones that sales that fall through for one reason or another. And our average was about 24%. And when I put that average line across here, that blue dashed line, it immediately showed me that the last half of this year we had more sales that fell through on the back half of the year than we did the first half. And we actually had a couple of weeks here where we were in the 35% plus fall through rate for a week. So this is a weekly look at that data, and we actually were above that 24% the majority of the last half of the year. So how much of that had to do with mortgage interest rates that were still rising as we got into the middle of the year? I don't know, because you would think that if mortgage interest rates came down, maybe buyers would come out, and home sellers maybe would want to keep their sales together. But either way, we just saw a pretty good increase there of back on market near the last half of the year. So we'll watch that, and that 24% will be kind of our benchmark for 2024 here. As far as listings expired, it's no surprise. Every year we always see December as one of the top. In fact, it was the top week where we had the most listings expire, with the December 31st date. I would anticipate that January we will start to see here this next week a lot of relists or new listings coming on, but this is pretty typical here. As far as canceled listings, those sellers that just simply gave up and said, okay, we're going to take our home off the market. Now, that doesn't mean they won't come back on the market, but these are typically the ones that say, you know what, we're just going to take it off and wait till the spring market. That was a pretty low number. It was under 30, I think, 35 or so the last week of the month. And we've really only gone above 50 2 or 3 times here, most recently in the last quarter here. So we'll see kind of how that goes. Just to kind of keep the show moving this week, I always do talk each week or each month about the for sale by price point within the metro. I'm working on improving this graphic and combining it both with the sale pending and the actives, trying to come up with a better graphic interface view of for sale and pendings in one easy to understand graphic that shows you kind of what's happening across the metro, and also then broken down, as I always do, by the single family resale or the condo townhome resales or the new construction. So there will be some revamping of a lot of the graphics this coming week and these coming months here as we move forward. So, well, with that, this is kind of the show format for next year. The graphics are going to look a little different. The formatting of the graphics are going to change just a little bit. They'll still be published every single week at DesMoines Market Values SimplyDesMoines.com. And hope you enjoy the show each week. Be sure and subscribe to my YouTube channel. That helps get the show out to more people. I am not your competition. This is simply put together for your benefit each week. And if you have any questions, I've tied a specific email account now to Des Moines Market Values. It's statguy@DesMoinesMarketValues.com. Please leave me a message if you've got questions, comments, suggestions for the show. Would love to hear them. And of course, be sure and share this with everybody you can. So with that, we will cut it short for this week and come back next week with 2024 data. Thanks again for joining me. I hope you've all had a great holiday season, and now that we've been back to work for 4 or 5 days, you'll have a great 2024. We'll talk to you all again next week.